buy when there is blood in the streets, even if that blood is your own. This was a quote from Baron Rothschild, one of the founding fathers of the world's most wealthiest families. And I think his point here has been proven in crypto today. Altcoins are up 20, 30, 50%. Yesterday, they were down respectfully the same amounts. Now, of course, that doesn't quite equal out. Okay, we are still down from yesterday, but the point is bounces can happen very quickly, even in markets that react hyperbolically like crypto. And if COVID of 2020/2021 taught us anything, those who were brave enough to invest down here when everyone thought it was all over and wait a few months, of course, these people reaped insane rewards. And I think this is a very important point to remember and echo to you first thing in this video. Now, today we're going to be covering some of the bearish reasons the market, not just crypto, but of course the macro market has crashed, some possible warnings that may still occur over the next week or even a few days here that you need to be very much aware of. And also, but most importantly, covering the bullish things still to come. Just like the big C word, I don't want to say too much times for my monetization's sake here on YouTube. That, of course, was a very bad event. We thought the bull run was over. We thought things weren't going to be the same. And of course, they prevailed. So of course, I think, guys, based on what I'm going to tell you today, and I'm not trying to sway you, by the way, but I think after this video, and I'll weigh in my insights at the end of it, you should have a much clearer idea of possibly where we are and may go to in the next 3, 6, 9, or 12 months for crypto specifically. And I think this is important right now because a lot of influencers, even people like Russell Brand, who aren't specifically within the crypto niche itself, are talking about, again, like some of these titles, it's over. You know, you sell your crypto immediately. Like, of course, a lot of this is, it has to be clickbait. That's part of our job, is to incite people to click. And this can actually be a sort of echo chamber, if you will, because if you are someone who skims these titles, even the title of this video, thinking a certain way, oftentimes if you leave too early, you don't get the full picture that the influencer is trying to make, okay, which can obviously lead to you selling prematurely, which cascades a lot of the time as well. So hang in tight. Let's begin. And before we do not forget, if you find yourself enjoying this video, hit that like button and make sure you are subscribed to stay up to date on the most important things in crypto to ensure you can reach your financial dreams this bull run, okay? And yes, if you're wondering, a button has been undone because the heat is turned up right now in the market, and the further we crash, the more buttons that will come undone until I eventually end up having to go shirtless, just like Jerry Banfield. So let's begin with the possible news that might come out over the next few days. Iran and Hezbollah might actually go ahead and attack Israel. Now, this is obviously a very scary thing, especially if you are involved in around those countries. But I do want to say, guys, there is a possible chance that this has already been priced into the markets to some degree. I'm not saying it has definitely been, but of course, this has left people fearful, which usually means they are typically selling before it actually happens. So whether it does or doesn't happen, I obviously hope it does not. But if it does, there may not be as insane of a reaction as we might suspect. Again, that's just me speculating here. Of course, looking within crypto right now, yesterday in literally 60 minutes, an hour, there was almost $400 million liquidated. And as a matter of fact, there was about 275,000 crypto traders who were actually liquidated. Pretty scary stuff. Now, all of this was most definitely created and stemmed from the situation over in Japan, where their stock market suffered the highest and most impactful losses since 1987. Now, I believe they've actually stopped trading temporarily here as well. If you're wondering why, Kyron, well, to cut a long story short, and I really suggest I'm going to cut this story very short because I think me, Kevin, did a fantastic video. I'll leave the link down below to explaining this, and this took him about 20 minutes to do, so I'm not going to even try to get into it too much. But basically, because in Japan, prices and interest rates have been on the decline, stagnating / on the decline for a very long time. This is over the last, since 1984. You have these random spikes, sure, but most of the time it's been pretty steady. And since basically 2021, it's been going down quite rapidly, which has given those in the know the ability to borrow, like lend money in Japan, okay, carry that money over to US markets, then even go on margin, right? So have, maybe if they spend $1,000, get $2,000 over here, put it into stocks, Okay, and of course, the interest rates in Japan are falling down and falling, so they don't have to pay as much money back, right? Over in the US, okay, the prices of their stocks are increasing, so they're just making money and saving money at the same time. But then Japan's been increasing their interest rates suddenly in the last month or so. Okay, if we have a look here, this is the last 12 months, a massive spike has occurred in the last month where they've pretty much gained 10%. And this has caused a pretty big problem, right? Because now all of a sudden, these people who have borrowed money in Japan owe 10% more back now. Okay, to cut it pretty simply. And in the US, stock prices are coming down, stocks are falling, which means now they're at possibly a loss. They're being margin called here. And over in Japan, they owe more money back, which means they are more likely to be margin called over there as well. Okay, so a big problem has occurred, and apparently I've heard about 10% of the entire stock market, the equities market, is leveraged this way. Apparently, this is talking a lot of money here, trillions of dollars. So there's a big problem that has occurred. This is the very basics as I understand it, which is called the carry trade or the funding trade. Look into it. Again, Kevin does a great job of explaining it here, but I will just at least introduce this topic to you because this has been one of the main reasons why, these prices and everything has pretty much hit a massive brick wall and come straight down. Now, Raul Paul also touches on this. I will leave the link to this video down below as well, where he goes into some of the more macro events as well and some of these charts and indicators that, have also played into this possibly happening. Again, I'm not going to go into that at all. A lot of the stuff that he explains in the video, I truthfully don't completely understand myself, so I don't like talking about things I don't fully understand. But what I do understand is why crypto specifically has taken a little bit of an extra beating, and I'm going to let him explain this in this quick segment here.
Ethereum has been a hairy ride. Now, part of what's been going on is jump trading have been dealing with legal suits with the SEC, CFTC and others, and are closing up shop in market making in crypto. And they've been fire selling everything. And that's created a huge overhang. A lot of this boring zone has actually been the overhang of selling by Grayscale as they unwind the trusts, Germany selling Bitcoin, Mt. Gox selling Bitcoin, the FTX estate selling Solana and other tokens, and then jump trading. So that's what's been causing this really. This last spike was this macro spasm on this small macro shock. And again, let's see let's see what happens with the Iran-Israel situation.
So he goes into a few different things, and of course, I've cut that very short, so watch that video, please. But he also does believe the banana zone, so this next leg up will still occur. He very much so is a believer in that. Of course, we've come down quite a bit, but guys, let me just remind you that these crashes in crypto, as we'll see here in a second, are very normal. These negative 20, 30% weeks, it happens a lot in these bull runs, okay? Not to mention people were really skittish. The fact that Berkshire Hathaway, of course, Warren Buffett's company here, has been stocking up their cash. Okay, $277 billion. They've never seen this before, right? Leading people to believe, hey, what do these guys know that we don't? Greatest investor of all time here, stacking up cash. What do we don't know, okay? So they actually slashed their Apple stake in half because of what's possibly coming, which you can kind of deduce some things. I think there is going to be a crash, yes, but I don't think we'll be in a recession yet. I mean, at least an official recession. I believe that the Fed, as we'll see here momentarily, will actually begin cutting rates and periodically over the course of time, which will hopefully allow us to postpone that. At least it's going to come for sure. The cracks are most definitely evident. It'll come likely a lot harder than just simply a recession. At least that's what I believe based on a few different things I don't want to get into in this video. But at least for us, for this bull run, we should hopefully make our money. I'm just not going to be hodling for that time, of course. Now, one of the things mentioned there in that video from Raul Paul was the fact he mentioned this company called Jump Trading. Now, Jump Trading, you can see over here, these guys are really experienced traders in the market. They've been selling off a lot of Ethereum and their assets, okay? Now, a lot of people were believing that, hey, I mean, this chart right here shows it, right? All of the Ethereum sell-offs was in anticipation for this or possibly an even worse crash. But actually, as Wesley Kress here so elegantly explains, this is actually because they got in trouble with the CFTC. Why? Manipulating Luna's stablecoin in the last cycle, okay? So the CFTC are saying, hey, you're going to owe us some concessions for your role in propping up this for so long and causing so much more, I guess, unrest or eventually, all of the issues that came along with that. And so you owe us money. So they're likely selling off in anticipation to that, which may have some further consequences on the Solana ecosystem. I will leave this long thread here from Wesley in the description as well. It is a great read. and all the rest of it. So let's talk about some of the more bullish things and things to remember here moving forward, okay? First of all, guys, like I said before, 20, 30, even 40% plus crashes in Bitcoin's price is completely normal in a bull market. This is the last cycle, obviously, 20, 30% drawdowns were common. We even had a 51% drawdown, and yet we still hit new all-time highs. So we fast forward to where we are today. We've already pretty much had a 20% crash over here. We've had some smaller ones, more or less the same size. And this one, of course, falling down to a crazy, what was that, about 30%. At that time, we're now, of course, not as deep. But yet again, great opportunity, I believe, to DCA if, and I really want to stress this, you are not so much confident, but are willing to put money in, you're willing to lose for the potential chance that we have just bought a massive dip in the market, just like, again, the big C word from the last cycle. So another bullish factor here is the fact that whales are accumulating and paper hands are selling. Now, what you have to understand is in a bull run, as you can see here back in 2018 and 2021, this heat map represents the short-term holders of Bitcoin, right? The paper hands, if you will, the people who don't really have too much longevity in Bitcoin. And you can see here that they end up buying the tops and they sell the periods where they should be buying, right? The low moments in the cycle. And it's literally the complete opposite for whales. Whales buy up the lows and they sell the highs. They literally swap hands from whales to paper to whales. So you can see here, we actually started coming down a little bit, which was worrying. We never got to the level of about 15% or 20%-ish in terms of the holding for these whales, which would indicate the possible top. We only went down to about 40, 45%, and now we can see a divergence underway where we're possibly now having whales accumulate again, where paper hands have begun selling, which is a good thing, as a matter of fact. We never even got close to being up to the 70, 80% where paper hands like to begin buying for the top of the bull run. So that's, of course, one of many indicators. Of course, Larry Fink, I believe the new Elon Musk of this cycle, propping up and pushing, kind of like an evangelist now for Bitcoin and other assets as well. This guy's probably got more weight than Elon to some degree because he can bring in the big money, of course, and literally bring on institutions upon institutions. Now, like I said before, I believe that the US will begin cutting rates. Right now, the probability of this is 100% for the next meeting, which is fantastic. We're likely to move down 25 basis points. And if we have a look at what experts are predicting, most of them believe to some degree over the next 7 meetings, we will have rate cuts, which is great. That will, of course, spruce up the market. Not to mention, of course, the last quarter of every bull run tends to be quite positive for the price of Bitcoin. You can see here, the average is about 88%. This is including bear markets as well. So bull runs, typically in the last quarter, are very good signs for both Bitcoin and, of course, Ethereum. Not to mention we have the US elections coming up as well, November-ish of this year. That, given the chance, again, don't want to be political here, RFK or Trump, they win. Again, very pro-Bitcoin crypto people. If they get in and win, then that should hopefully be a very positive thing for our wallets as well. I don't want to get political. Please just remember that. Also, the US Treasury has decided to increase the buyback from 15 billion to 30 billion, injecting more liquidity, which is fantastic. Also, guys, it doesn't stop. Literally, it does not stop. Russia is legalizing crypto mining and is actually looking to bring in an experimental regime. What's the experimental regime? Well, a secondary experimental law allowing the central bank to authorize selected companies to conduct cross-border settlements and exchange trading in digital currency. Huge stuff could be coming here very soon. All it's going to take is one of these really massive announcements to occur at some point in the next 3, 6, 9, 12 months, and we're going to have prices pretty soaring. Now, of course, legalizing Bitcoin mining was a complete opposite of what happened in the last cycle where China banned mining. And what does that mean? That means prices are going to hopefully do this. That's positive. Of course, it helps secure the network. It helps provide more security for the Bitcoin, and hopefully, prevents some capitulation event from occurring, which usually happens at the end of the cycle when things start going down and, small miners, mid-sized miners, even some large mining firms can no longer support operations. We also had Morgan Stanley, all right, saying to their wealth advisors, hey, let's start pushing the Bitcoin ETFs. After this, it's going to be Ethereum ETFs, and then who knows from there, but also, they're the first, guys. This is huge news. No one's talking about this. I mean, this came out on August the 2nd. It's August the 6th right now, at least over here in the land down under. So this could be huge stuff, all right? And people just haven't really caught onto it yet. one final thing I will finish up on is the VIX, right? The CBOE Volatility Index. This is the index for the the Volatility Index for the S&P 500. This is all based on options. Okay, so when option contracts are spinning up and spiraling around and everyone's sort of panicking, that usually spikes this index, to say the least, right? Which causes, actually, let me just get rid of my head here, which causes the index to spike. And as you can see, every time this spikes, even on the smaller time frames, there usually occurs some sort of correction or crash that comes along with it, okay? Literally, they are inversely correlated. So we can have a look here at how large this spike has been. It's actually the largest spike that has occurred pretty much way back here since the big C word. And, of course, once this begins correcting and coming down, usually is a great sign that things should start looking up and up. This happens time and time again. Of course, it's never completely guaranteed, but I did want to point it out because, again, it's yet another indicator. Obviously, if things are hyperbolic, there's only usually one way things can go from there, typically, right? So guys, let me know what you think down below. My personal thoughts to conclude all of this is we have seen the crypto market now bounce back and react pretty quickly. If you were one of the fortunate people to buy the dip, if you had the bloody cash, good on you. I hope this bull run works out for all of us, and I think we can, I wouldn't say rest assured, but just breathe a little bit here and understand that markets do this. If you have a look at the broader 18-year cycle, okay, there's a housing cycle that occurs every 18 years. Not going to get into it in this video right now, but we have still another 12 to 24 more months of possible bullish momentum. I believe, again, that'll coincide with the rate cuts the US will actually, propose over this time, and then they'll defer the the inevitable crash, I think, and which will ultimately call, for maybe even a depression, which I don't hope on any of us, but it's likely to continue or happen if this continues. So thank you all. Talk to you all soon. Take good care. Bye-bye.